Mahesh Patil, co-CIO, Birla Sun Life Mutual Fund joins in. Mitesh Thakkar, technical analyst at miteshthakkar.com, and Nipun Mehta, founder and CEO at Blue Ocean Capital Advisors.
Nipun, a quick word on Tech Mahindra to start off with, since we're talking about results. Asian Paints came out, Tech Mahindra came out, and a number of 614 crores versus a poll of 655 crores. So a bit of a disappointment out there, and IT seems to be falling out of favor.
Sure, some of these results that have come by over the last few trading sessions haven't been up to expectations. Tech Mahindra was one, PNB was another, Asian Paints again. So clearly showing up that there's no specific trend that's happening across. When you look at IT, yes, you've seen outperformance by some of these larger companies, which was probably expected to happen even as far as Tech Mahindra is concerned. That was what was surprising. But our sense is probably it will be a one-off quarter, not necessarily that's a trend that's going to show as far as the company is concerned, or again as far as the industry is concerned. Yes, you probably have issues as far as one or two larger IT companies are concerned, maybe an Infi, maybe a Wipro, but typically it's probably more as exceptions. Again, when you look at the banking results, PNB probably stood out in terms of the fall as far as in profitability is concerned, but again also showing up that while on the one side those asset quality concerns remain, at least some of these banks, when BOB came out with the results, with its results, it showed that yes, there are a set of banks where those concerns are receding, and that's the reason why you also saw a run up, beside of course the PG Naik report, but really you also saw a run up as far as some of these banks are concerned. So these results clearly showing up a mixed bag, no specific trend across the industry, but clearly an gradually improving trend across some of the sectors where there were concerns earlier, something like banking to be specific.
Yeah, and in fact, let's just dwell on the numbers a little more. 614 crores, I don't think that's really going to go down well with the street, given that we were expecting 655 crore rupees this time around. The net sales figure too, that's come in a little bit better than what the street was expecting, 5,058 crore rupees. And EBITDA margins pretty much in line with what we were going in with, 21.2%. By the way, there's been a forex loss of 167 crore rupees versus a loss of 141 on a sequential basis. And you can see a decline this time around in the margins on account of the deferred revenue amortization, as well as on account of the wage hikes. We were expecting a forex loss, so that's also in line with expectations. And watch out for the dollar revenues, also expecting a 2.5% jump, largely on account of the strong growth in the enterprise business. We'll also be keeping an eye out on the large deal wins, the status of the KPN deal execution, and the BT contract renewal. That will be watched out for. But for now, on the profit front, though, it's been a bit of a disappointment. But let's move on then and get in a view, Mahesh. 7100 is here. Do you think it's time now to trade with caution, or do you think that this is just the beginning of a mega bull rally?
Yeah, the markets have actually done pretty well in the last few months or so in anticipation of a change at guard at the center and expecting a stable government. So I think while from a near-term perspective, I think the markets have discounted to a large extent the anticipated change. I think it's important to really look at a picture from a slightly medium to long-term perspective. Okay, whether this would lead to a revival in the broad macroeconomic environment, and that could drive earnings growth in the next 3 to 5 years. We have seen as we move from a bottom of the cycle, okay, as the recovery sets in, the earnings trajectory for companies, okay, in their initial few years is very strong, because as operating leverage kicks in. So I think given that longer term picture outlook, if that's the change what we are looking at, I think then there is still a long way to go. I mean, the run up what we have seen in the recent times should not really deter investors, okay, who want to invest really from a medium to long term perspective.
Mitesh, what would be the color tomorrow in terms of trading? Would it be aggressive trading, or just take it light before the numbers come out on Friday?
I think the market action does suggest some churn, but I would say that the price is not signaling any kind of weakness. While the Nifty was subdued today, the advanced decline was still quite healthy at 1.8:1, and we saw a lot of sectors or stocks which are not participated aggressively do some kind of catch-up. So I think the focus will be on those stocks and sectors. Clearly, the Bank Nifty and the Nifty, the way they've broken into all-time highs, I do expect that the price is kind of discounting a positive setup to the event. And as long as we don't start getting below 7,000, I think, the short-term trend or the immediate trend remains on the upside. So the buyers should be on the upside, the trading should be slightly aggressive, but again, you will have to pick your stocks carefully.
It's a slew of numbers. First up, from the frontline index, we're expecting Bajaj Auto as well as NTPC to put out their numbers, in addition to a lot of other numbers that will be coming out. Adani Power, Adani Ports, Apollo Tyres, Bank of India, J&K Bank, so a slew of them. But apart from that, on the macroeconomic front, we will also be watching out for the WPI numbers for the month of April. But just let's take you through what Bajaj Auto is expected to deliver this time around. The net sales are seen at 4,880 crores, up by just about a percent. Profits seen rather muted, so up by 0.7% this time around. And of course, there's a number of factors also that we will be watching out for, particularly the margins. That's seen a little bit higher at 20.5%. The volume decline of 5% in Q4 is likely to impact the sales, and a one-time loss on the inventory is likely due to the excise duty cut. For NTPC, the Q4 revenues seen up by 13.6%. Profits seen at 2,800 crore rupees, down 36%, and the margins are seen expanding, albeit very marginally. It's the new capacity addition which will boost the sales and the profits, and we'll be watching out for the guidance on the capacity addition as well as on the commercialization for FY15. Remember, last year there was a Q4 exceptional gain, so the profits were boosted by that exceptional item of 1,684 crore rupees. But Nipun, let's talk a little bit more about the auto space as a whole, and really each stock seems to be going on its own tangent. Today, M&M reacting to the news of that block deal. Bajaj Auto is expected to deliver a fairly decent set of numbers. What is it that you would be watching out for? And do you see prospects here improving on account of new reforms that will be doled out?
Well, as far as two-wheelers are concerned, really limited upside in terms of volumes is expected. We've seen lackluster volumes coming by. Yes, probably one or two of these companies have benefited coming out of new product launches. To some extent, maybe even out of exports that they've benefited, but domestic sales continue to remain muted. Really, even if there are reforms that are announced, at least immediately one fails to see how maybe in a quarter or maybe even 2 quarters you can expect any significant change in volumes. It looks difficult. Clearly, very limited possibility of interest rates getting cut, given the kind of inflation figures that we are really seeing. If there are reforms and growth does turn around and the economy does start heating up a bit, which will ensure that probably interest rates will not be cut again in a hurry, which will again mean that interest rate sensitive sectors, and particularly two-wheelers being one of them, might not necessarily benefit out of any interest rate movement that could be there, or any potential interest rate cut that could be there. So clearly the two-wheeler space does look to be under a bit of strain. Yes, probably like a Hero Honda could benefit coming out of like I said, maybe either new product launches or on a lower base, or on the fact that there could be higher exports. But overall, as a space, it continues to be, again, even the four-wheeler space really in a similar zone, similar situation, does look to be under pressure. Yes, company-wide, individually, you could see any margin up move that could be there. But overall, even margins continue to be under pressure when you look at maybe a Bajaj Auto or some of these, or maybe Tata Motors. So really overall as a space, except for individual companies where there are positives, the overall space in terms of volumes continues to be under pressure.
By the way, on this very show yesterday, we heard a recommendation on Ahmednagar Forgings. Just want to pull up that stock. And I think it's up another 9% in today's session. So was up close to 9% yesterday. Neeraj Diwan recommended it. In today's session, up another 8.5%. So good going for this one. Mitesh, today's trade seems to be concentrated towards the rate sensitives. While there was real estate which did very well, I think the talking point was during the trading day today what was happening in the PSU banks. Now, my question is, they've had a rally today. Tomorrow morning, if somebody wants to initiate a fresh trading play, intraday, which one would be the best placed banks?
See, typically, Neeraj, I think, when you are looking at a very short-term, 1-2 day kind of trading, the best momentum and the best risk-reward equation is for stocks which have given a fresh breakout. So I would possibly count the Dena Bank as well as the Union Bank. To a certain extent, IDBI, if you want to count it as a PSU banking stock. I think these three are the stocks wherein we have seen a breakout happen today, and they have not really moved up very far from the breakout levels. So placing a stop just below the breakout levels, I think these stocks can be bought.
Yeah, those were clearly your star performers in trade today. But Mahesh, there seems to be a lot of disenchantment when it comes to owning consumer names. But in this leg of market appreciation, when most of the fund managers and traders are chasing cyclicals, what explains the underlying strength, say, in ITC, of that matter, HUL?
Yeah, so I think so a lot of the FI money which has come in the recent past has come in from a lot of the passive funds or even some of the global funds, okay, which are taking a broad call on India, and they would typically buy the large index stocks. So I think the money flow has moved in some of these large index stocks across the sectors, and I think that's the reason why we have seen even some of these leading names in the FMCG sector also participating. I don't think we are seeing any meaningful change in the outlook for the sector. I think by and large we have seen some slowdown in last quarterly numbers, okay, what we have seen, and that might continue at least for a couple of quarters.
There are two high beta names or two high beta pockets which are doing very well. One of them is the Adani group of stocks, particularly Adani Enterprises, because the others have been a bit soft, Adani Port for example. The other one is the ADAG pack, particularly Reliance Capital, which has had a fabulous run, and both of these stocks did reasonably well. Nipun, there isn't quite exactly a fundamental value that you can probably attach to these, but these stocks were beaten on, and therefore there might well be value to them. Which of these pockets do you like as a trade or as an investment, assuming that there is a NDA-led government at the center?
Well, clearly both these groups rising partly because of undervaluation, partly because of obvious reasons where I mean there are expectations of these companies being able to grow. But really, I think that's not necessarily something that's a basis for a sustainable stock price rise. Really, I think one needs to look at fundamentals. When one looks at let's say a company like Reliance Capital, yes, there obviously seems to be some degree of clear fundamental strength that is there to it. It has seen fair amount of underperformance, but given the underlying businesses that are there, and some of which are leaders in their segment and are reasonably highly profitable, is something clearly that stands to reason that you could see strength coming into some of these NBFCs that are there. But really, one won't want to look at it group-wise in terms of what potential benefit could arise to a particular group. I think one needs to look at for a sustainable rise in a particular company or a stock, one needs to see the sustainability of benefit that the fundamentals show up in each of these, and maybe an NBFC in the same business, or maybe an infra in the same business, and particularly when there is expectation that there could be an increase in infra spending. Some of these companies are rising on expectations of that, but clearly I think on the basis of actual orders, actual implementation and execution, you'll really see an improvement that could be coming about. The point is not necessarily on the basis of the name, but more on the basis of fundamentals, really.
Among the other earnings tomorrow, we'll be watching out for an Adani Power, and we are seeing the losses contract this time around. 478 crores in terms of the loss versus a loss of 586 last time. And revenues, take a look at the jump that we're expecting, 125%, 4,250 crore rupees. And remember, these stocks have been on a roll, the entire Adani group of stocks of late. NCC expecting a muted set of numbers where the top line growth is likely to come up a bit, just about 2.7%, and the reported profits are seen lower by 42.8%. Now, Mahesh, a lot of people seem to be betting on the infrastructure names. We've seen quite a bit of flavor in names today as well, like IRB, HCC, NCC, and Adani group of stocks. What's your take on this space?
Again, I think the infrastructure sector is again an area which, as I said earlier, that will be a priority, okay, for a new government to really kickstart the whole economy. And that's the reason we have seen a lot of interest in these names. And I think a stable government and clear policies, and with interest rates at its peak, and possible some moderation, okay, not immediately, but next 1 year, I think could be a good recipe for the sector to do well for the next 3 to 5 years time frame. And that's what has led to a lot of interest in the sector. But from our perspective, we would still not really rush into some of these very highly levered companies, because as I said earlier, interest rates are not likely to come down in a hurry, and the balance sheet is still under stress. So companies with stronger balance sheets, I think would be, even they might be a bit expensive, but I think those are the companies really we would look at, because they will be the first beneficiaries in terms of capitalizing any opportunities which would come in this space.
Tomorrow is certainly going to be an important day to watch out for, a day ahead of the big election verdict. So the markets will certainly be in favor. Let's find out what the dealing rooms are talking about, which stocks they're advising that you should keep on your radar. Yatin joins in with the details. Yatin.
We have Sterlite, wherein a lot of institutional interest is there. In fact, dealers do believe that a lot of FIIs have been looking to buy the shares. They have been underperforming and not been moving like other group stocks like the Adani group stocks and Anil Ambani group stocks. So this is one, Vedanta group, wherein a lot of outperformance is expected, and hence dealers have been buying this ahead of the election verdict on Friday, wherein possibly the NDA-led government will be forming the government. So let's see how really things pan out for Sterlite, but institutional investors bullish here. And finally, CLSA, they have been talking about South-based cement companies. In fact, they have upgraded, India Cement to outperform with a target price of 80 rupees per share versus the earlier target price of 55. They have also reiterated a buy on Ramco Cements, and they have a buy with a target price of close to 300 rupees per share. So clearly they are expecting the revival in the certain markets to happen. They are expecting the volumes and the pricing will improve, especially with the problems that are getting sorted in the state of Andhra Pradesh, wherein almost 10% of the business used to come. If that revives, all of these companies would benefit. So these are the two stocks wherein dealers are remaining constructive in the medium term.
Many thanks for that, Yatin. So just watch out for some of those dealing room stocks. Mitesh, what would be your top trading ideas for the trading day tomorrow?
A fresh breakout appeared to have taken place in R power. It's managed to finally close above levels of 75.5, 76. So I would suggest accumulating the stock, the stock in the range of about 78 to 76.5 for the next 1-2 days. Keep a stop below 75 and look for targets of 84, 85 on the upside. The second would be a buy on Tata Chem, again in the range of about 305 to about 303. Keep a stop at 297, and here I will look for targets of around 320 on the upside.
Mahesh, oil and gas as a theme has emerged as a pocket that a lot of people have begun to like. You have them betting big on prospects for the likes of Reliance Industries after it popped up significantly past that 1,000 mark. What's your opinion?
I think the oil and gas sector, I think there are two parts to it. One is the domestic upstream companies and the oil marketing companies, which were really walked down because of the kind of subsidy sharing they had to bear. I think in the current environment, as we have seen the diesel, the under recovery is coming down because of the subsequent price hike. I think the balance sheets of some of these companies, would improve. A lot of working capital, which was tied up in receivables, that will get cleared up. And that should improve the outlook for some of these companies. But by and large, I think the sector, if you look at the petrochemicals, which is more a global commodity, there we are not seeing any meaningful upside in terms of either refining margins or petrochemical margins. So I think on that overall, the refining space and the petrochemical sector, I think the outlook looks to be pretty muted over there.
Okay, gentlemen, we'll leave it at that. Thanks so much for taking time out and joining in and giving us your recommendations as well as views on the markets.